Hey, if you're looking to create financial projections for a potential investor or lender for a B2B marketplace business, then you've come to the right place. We have created a financial projection template built specifically for B2B marketplace businesses. So most marketplace businesses that you might commonly think of are business to consumer. So you think about like Airbnb, or they might be consumer to consumer, right? Where consumer has a home that they're willing to rent out, and individual consumer wants to rent that home, and Airbnb is the marketplace in the middle of that. But sometimes there are B2B, business-to-business marketplace options or opportunities as well. So for example, this template could be useful if you are trying to build a marketplace for, let's say, a hospital to buy supplies. Let's say they need cleaning supplies, and right now maybe that business is done through this big, thick magazine with all of the different cleaning supplies, and the hospital administrators go through and pick what they want. And maybe you're saying, hey, I'm going to turn this into a digital marketplace where we have the suppliers get on the marketplace and the hospital administrators get on the marketplace, and they connect and purchase through the marketplace. So that could be an idea of a B2B marketplace model in which you would need probably a sales team to go out and get the hospital administrators on board, and a sales team to go out and get the suppliers to list their products for sale on the marketplace as well. So that's an example of a type of B2B marketplace. I'm going to show you how to go ahead and use this template here today to create projections for that type of business model. But first, my name is Adam Hoeksema. I'm the co-founder of Projection Hub. Over the last decade, we've helped about 50,000 entrepreneurs create financial projections for potential investors and lenders. Today, specifically focus on this B2B marketplace template. And we're going to put a discount code in the description of the video below. So at the end of the video, if the template looks like it's going to be a good fit for you, I'll show you how to go ahead and grab that discount code as well. So with that, let's go ahead and dive in. Okay, we're starting kind of with the end in mind here. So this is our at a glance tab. Once you have done the work of creating your projections, this is what you're going to get. You're going to get some nice profit and loss at a glance table, some summary data, use of startup funds, and a table that you can use in your deck, some key ratios, and some nice graphs and charts. You're also going to get a 5-year income statement summary, 5-year cash flow summary, 5-year balance sheet summary, and then the income statement, cash flow, and balance sheet all broken down by month. So you have that monthly level of detail as well if you need it. So that's kind of the end deliverable of the projections, but we have a lot of work in order to get there. And so I'm going to show you how to enter in these various assumptions. So let's start out by assuming, hey, we're going to raise a seed investment of 1.2 million to build out our company, our platform here. Don't have much in the way of fixed assets. Don't have much in the way of a business loan because we're a tech startup here. And so let's move on to revenue. This is where a bulk of the work is done. And so again, if we keep with this idea of cleaning supplies for hospitals and being the sellers here, the vendors, we're going to have to go out and try to get those sellers to list their products for sale on our marketplace. So maybe we are taking a two-pronged approach where we're advertising to these sellers. We're hoping some cost per click, and that will drive some paid website visitors to the site that are potential sellers. We are also hoping to get some organic website visitors from potential sellers. And then we assume some conversion rate of those will become leads. So of those visitors, some of them will become qualified leads. So we have this number of leads from website. We also assume that, hey, it's probably going to take a sales team. We're going to need a sales team to go out, get the different vendors and suppliers to list their products on our platform. So we're saying, hey, we're going to have one salesperson. They're going to be able to generate 5 qualified leads per month. And that's going to give us our total number of leads that are sellers. And we assume some conversion rate that the sales team will be able to convert, let's say 5% of those leads into new sellers on the platform. We also assume some of those sellers will churn or they'll leave. And so we have a churn rate there as well. And ultimately that will give us our total number of active sellers. We're going to have to do the same process here now for the buyers. So if we're keeping with the same example, there's different hospitals or hospital networks that are the buyers. And we could do some advertising to try to get hospital networks on board on the platform, but most likely we're going to need a sales team to go out and build relationships with those hospital administrators and convince them to come on the platform and buy through us. And so we'll have that same logic, some leads, conversion rate, that sort of thing that will give us a number of new buyers and total buyers on the platform. From there, we want to know we need to kind of understand the supply and demand. So each seller might be able to put a certain number of units available for sale. And so maybe if we're talking about cleaning supplies, maybe it's many, many units. So maybe it's 20,000 units a month per seller are available. That's their capacity to put on the platform. And the average buyer is maybe some very large hospital network, and they are buying 50,000 units of these cleaning supplies per month. And so now we know, okay, here's the units based on the number of buyers that we have on the platform and how much they would buy per month, and the number of sellers we have on the platform and how much supply they have. We know the units of buyer demand and the units of seller supply. Now we see that there's much more demand on our platform than there is supply at the beginning, at least. And so what we're actually going to be able to sell, what will actually be purchased, is limited to the lesser of either the supply or demand. So since seller supply is 55,000, we're assuming 55,000 units are sold in that first month. Now, okay, since we've been saying, hey, this is a high unit volume business, we're going to probably change these prices to much lower price points. Maybe it's $1 and $2 and $3 and $4, $5, $6, $7. Since we're selling a lot of units and these are cheap cleaning product, high volume type products, okay? So that will give us our average revenue per unit on the marketplace. And then we know that, or the marketplace has the opportunity to generate revenue in a couple different ways. You could charge a per transaction fee. You could charge a per unit fee, which may not make a lot of sense in this example. And then probably the most common way is just a percentage of total sales, that the marketplace would maintain or retain a percentage of the total sales. So if we said, hey, we're going to retain 10% of total sales, well, the total transaction volume from all the units sold here in this first month is 198,000. The marketplace is keeping 10% of that, so 19,800. And that gives you your total marketplace revenue. The marketplace has a low cost of goods sold because the marketplace is not actually buying the product and reselling it. The marketplace is just making the connection and really earning that 10% commission on the sale. So your cost of goods sold would be really low. Now, if we move on to our input operating expense tab, you'll be able to input various operating expenses, individual line items. You can also categorize them by marketing, general and admin, or development maintenance. So it could be development of the platform. You can also input expenses as either a fixed dollar amount or a percentage of total revenue. So the transaction fees, if you're charging credit cards on the platform, you're probably going to have a credit card transaction fee. And that's a good example of something that should be done as a percentage of total revenue. So we put in 0.02 or 2%. That's how you'd enter 2% for your transaction fees as a percentage of revenue. And now you can also enter in salaried positions as well. You can enter the different job titles, the salary, the benefits, what month they're going to start. So you can say, hey, we're not going to hire a CFO until month 13. If you have, let's say here we're going to have 2 senior software engineers that we're going to hire at the same time. And so we could just enter in the number of this particular employee as 2. And once you've done that, you're really back to where we started with our at a glance. And we can see, based on my rosy projections here, we have these massive revenues and net income. So of course, you will need to do your own analysis of your market, right? And this is just a quick example of how to fill the template out for a B2B marketplace. And so wanted to walk you through how to do that. Now, if you have any questions, feel free to reach out at support@projectionhub.com. And also, again, thank you for sticking around to the end of the video. We have that discount code. There'll be a link in the description of the video below that will allow you to go and get our most up-to-date coupon code. You can get that coupon code and then use that at checkout to get a discount off of this particular template. So if you have any questions, again, support@projectionhub.com, and best of luck. Thanks.